Hi, I'm Ken from the Ken Rigel Group, and I'm not sure if you heard the news or not, but today the Bank of Canada came out and they held the key overnight rate at 5%. So that's going to have some effect on mortgages. So we have brought in our mortgage expert, Danielle Di Marco, who is the co-owner of Mortgage Line. Thank you for coming on today to talk to us about what this is going to mean for mortgage rates moving forward. There's a lot of people that have been sitting on the sidelines in housing in Calgary and in Canada waiting for rates to come down, but we didn't get that news today. So tell us how this is affecting the mortgage market.
Yeah, for sure. I mean, as we talk about the overnight lending rate, that has to do with the government, what they're lending their funds out at. When that stays the same, obviously the prime lending rate, which is the rate that affects consumers and homeowners and, line of credit rates and variable mortgage rates, those also remain the same. So
Right.
obviously people were hoping that that would come down, lower some payments, but there was not that relief given today.
So what would you say to people? Because I hear this all the time. Oh, we're going to wait till rates come down. That is a crapshoot in our world. We don't know if they're coming down or if they're going up or what's happening. Like something like today, now that's just pushing it down the road a little bit farther. What are you saying to people who have that mentality right now that they want to wait for rates to come down? What are you seeing?
Yeah, great question. And I'm addressing this literally multiple times a day right now. I've said this before. I think, Ken, you've preached it also, but the longer you wait, you're getting outpriced in the market. The
For
way
sure.
immigration is pricing in Alberta, we're only going up. So if you're holding out for rates to decrease, you kind of got to think about what that domino effect is. As the rates come down, we see more home buyers able to qualify. We see more home buyers entering the market, which means there's more competition on the already scarce availability of houses out there as it is. The
Yeah.
more scarcity there is, then there's more offers on each property. The more offers on each property, higher the demand, the higher the prices
Higher the
go, and there's
prices.
just not enough supply. So great if you're trying to wait for rates to come down, but the problem is as rates go down, prices go up. So you're
Yeah.
paying either way. You might as well just get into the market.
Yeah, you might pay a little bit less interest, but the price of the house is going to go up, so your payments are actually going to be way higher anyway. So
Exactly.
it doesn't make sense to wait. Real estate, there is an old saying in real estate: if you wait, you lose, and it has never been more true than it is in Alberta right now. Okay, so let's just talk about what interest rates have done as far as mortgages go over the past little while, and separate things out from variable to fixed, and what you think is going to happen over the next little bit here.
Yeah, for sure. So, like we were touching on, that overnight lending rate, that affects variable rates. So, variable rates for consumers and homeowners are based on the prime lending rate. If that Bank of Canada overnight lending rate goes up, the prime lending rate follows suit and increases. If that rate goes down, the prime lending rate follows suit and decreases. Therefore, payments go down. So, again, like I had mentioned, obviously people want that rate to come down so that they can see some relief in their payments. But as a result of what's happening in the US and their inflation, their inflation today caused a spike in the US 10-year Treasury yield. So then this is therefore causing a spike in the Canadian bond yield. As that bond yield goes up, we're going to see those fixed rates go up. As the overnight lending rate remains the same, we're going to see those variables unfortunately stay where they're at. So as far as rate relief goes, if you're in a variable rate where you're dependent on that overnight lending rate, there's been people saying, oh, April it would go down, June it's going to go down. My gut's telling me probably not until closer to the end of 2024, just the way we're seeing inflation go. As far as fixed rates go, we were seeing decreases consistently since December. We're down almost an entire percent in fixed rates from where we were in 2023 to where we are now in 2024. The difference is that as a result of what's going on inflation wise, US economy wise, we've been seeing these bond yields go up steadily the last 3 weeks. As those bond yields increase, that affects our fixed rate side of things. And so we're probably, I mean, fingers crossed we don't, but probably going to see a slight increase here. And by slight increase, I do mean slight and also short term. We are still heading in a downward trajectory overall as far as fixed interest rates go in the market heading towards the summer, which was the prediction.
Right.
However, it's like anything. The rate market is always up, down, up, down, up, down in the middle of this downward trajectory. So while we might see a little blip of an increase, we should still see those rates continue to trend downward towards the summer.
Got it. Got it. And it's always interesting to me because people, they talk about, the overnight rate, and that's the big news rate. And everybody thinks that mortgage rates, that's what the mortgage rate is. Well, it actually isn't. Mortgage rates have been moving quite a bit over the last little while. It just doesn't make the news like the key overnight lending rate announcement does when the Bank of Canada does that, every few months. All right,
Yeah.
cool. So we've got that all taken care of. Yeah, mortgage rates. If somebody came to you right now, they had decent credit, like the average human being, decent credit. They're looking for a fixed rate mortgage, and let's just say it's a 5-year. What are they paying right now as of today?
Yeah, so this is kind of neat. It's actually something that's quite new in the last month, month and a half here, is we are seeing what we are referring to as discretionary pricing. So yes, there might be an advertised interest rate by a lender. However, as brokers, we're able to sometimes negotiate that down. And there's a few lenders right now that are actually in allowance or accepting or negotiating, whereas most times it's like a firm, this is the rate. So it does depend on the lender, but as a result of what we're seeing right now, there's a range of rates. So let's say you're putting less than 20% down, like you said, 5-year fixed,
Yeah.
you're around 479 to 499. We have
Okay.
actually seen less than 479, but again, it's that discretion. It's like, hey, such and such lender, here's the application for my clients. They have great credit, they have great net worth, they have, an awesome down payment. Overall, it looks really fabulous. Instead of 479, can you give us 469? And so then it goes to head office for approval, and then we get to negotiate a bit. So we're in a unique situation as brokers right now. I can honestly say I've been doing this for 17 years and I've never experienced this before. So it's a really neat spot to be in. However, again, touching on what we just chatted about with bond yields going back up, I suspect that discretionary pricing is going to be going away any day now, when we're back to kind of like, hey, here's the advertised rate. This is what you get.
This is what you get. Okay, cool. So just and for people that don't know like bond yields and bond rates and how that correlates to mortgages, can you just explain that a little bit in layman's terms for people that don't understand how that market works?
Yeah, for sure. So fixed rate mortgages are based off of bond yields. As the bond yields increase, fixed rates increase. As they decrease, fixed rates decrease. The variable rates, again, off the prime lending rate. As that overnight Bank of Canada rate increases, variable rates increase. As it decreases, variable rates decrease. So two totally separate sets of rates determined by two completely different factors, and neither the two are necessarily related. So we may see variable go down and fixed go up, or vice versa.
Got it. Okay, cool. So Bank of Canada, the overnight lending rate stayed the same today. The market was actually expecting that. They weren't expecting inflation to be as sticky as the government came out today and said that it was. So that's affected things a little bit. What I always find fascinating, and I've mentioned it before, is that people get so hooked on the overnight lending rate when really that is not what you need to be worried about when you are getting in line to take out a mortgage. What you need to do is talk to your mortgage specialist like Danielle, because she can tell you exactly what you're going to be paying as far as your rates go, because it's not going to be exactly what the overnight rate is. Would you say that's correct?
100%. And it is common misconception. Everybody, and I mean, the media does this, right? They create this frenzy around these Bank of Canada rate announcements, but really they only affect people in variable rates.
Sure.
That's it as far as mortgage financing goes. For anybody that's in a fixed rate, or looking at fixed rates, those rates are changing daily, weekly, monthly, consistently in between all of those meetings. So it is important to be, monitoring bond yields, watching what is going on in the US as far as, the economy and their treasury yields. But as far as actual interest rates go, yeah, exactly like you said, reach out to a mortgage broker, do your research, 3 years, 4 years, 5-year fixed versus variable. Where are we heading as far as rates go? Make sure you're having those conversations so that you're getting into that right mortgage for yourself.
Well, one thing you're so good at is keeping people up to date when those rates are changing. Anybody on your list, like you're letting them know all the time. It's just a super, super valuable thing to have in your corner if you're considering buying a house right now. So, if anybody wants to get a hold of you and have a mortgage conversation, how do they do that?
Yeah, for sure. So they can head to reach out to you. You have my contact information, which is
Awesome.
fabulous. Somewhere.
Yeah.
Yes, somewhere in the pile. And then as far as my own contact information, it's 403-969-0233, or you can go to my website, danielledemarco.com, and find all my information there.
Danielle Di Marco, co-owner of Mortgage Line, thanks so much for coming on with us today. I'm Ken
Thanks
from
for
the Ken Rigel Group. Thank you so much for watching. And don't forget that if you like this video, subscribe to our channel below.